Hello, hello, hello. Thought I'd go ahead and open it up here since we got a few minutes before things kick off. This is a new format, new software for me, so we're going to give it a shot. Seeing some questions already kind of pop up, so let's do it. See here, does this show up okay? No, I need to get the right URL here. 1 second. There we go. All right, so I did not get the R2 yet, but it did land in the service center as of last night. So fingers crossed, we're looking at a delivery in the next week or so, probably late next week. So, very excited about it. Bittersweet, gonna miss the truck, but looking forward to the next adventure. That's right. I was hoping someone would notice. I picked the masking similar to a Rivian headlight, so that is awesome. Oh man, I wish it was the R3X announcement, but sadly, that is probably not going to come to pass today. See some interest here in model year 2027. It's got to be close. Got to be super close. So we'll see. I got my theories about what's going to be in it. I don't know for sure, but I think we'll see some interesting stuff. What do you want to see? What do you guys want to see in 2027? I'm curious. What would be a slam dunk for you guys? Realistically, I mean, you're not going to get like a whole generational jump this year, but what would make a 2027 chef's kiss for you? Get this going. Make sure it audio passes through okay. Can't really see it in the white background. This is OBS with some plugins and skins and stuff. What I might do is I might shrink this browser here a little bit. Let's do this. Now let's see if I show that. Oh, still not enough. There we go. Still getting the hang of it here. All right, let's see. Is everything rolling? They haven't started yet. All right, so in full transparency, I do have Rivian stock, but this is my intention is never to make this a stock-based channel. I care about the company. I think they're going to do interesting things. I like to invest in companies I think that are doing interesting things, and so that's why I have bought in when I bought in. But this is not financial advice. This is just we're learning about the company, seeing what's going up, seeing what's happening next, and go from there. Definitely not on the current Tesla capability. Hardware for point-to-point FSD is far more feature-rich, but we shall see. I do think that they will do a pretty decent job, though, in the next 12 months. The demo I got in Palo Alto in December of last year was pretty decent for a very early V1. Had lots of issues, but honestly, it was way better than what I had on the very first versions of FSD on my Model Y performance, but not anywhere close to where it needs to be competitive with V14 today. Yeah, yeah, that could be interesting, especially for R1T. It's notably easier to park the R1S than the R1T. That extra length really adds up. Trying to understand what you mean here. You talking about for R2? I would actually love to see an R2 premium rear wheel drive for maximum range. That's the biggest gap in the lineup for me right now. Yeah, Wrap One. I don't think we're going to see that in customer vehicles until solidly into 2027. Personal opinion, but we shall see. Maybe there'll be a surprise today. I suspect it depends on demand for the launch edition. If people keep buying it and they're not ready to launch Wrap One with lidar and all that goodness, I think they will keep rolling it if it keeps people buying. Yeah, that's my number one complaint with current Gen 2, honestly. Heat pump thermals, but I don't think we see that until 2028. Just my guess. What do you guys think about this setup overall? I'm kind of into it so far. I've got these different scenes we can do. So later when we get into Q&A, we can highlight your stuff here. But for now, we got the browser and we'll rock from there. It's a big departure from what I've done in the past. Very, very much agree that premium rear-wheel drive is the perfect California car. I honestly even think it would do pretty well up here in the Pacific Northwest. So I think there are a lot of people that would love a R2 Premium as like their commuter, and then maybe they get a R1T tri-motor for their rip around, do fun stuff. Yeah, R2 Rad, which, that's why I made, hold on, let's pull out one of these bad boys. That's why I made these guys. Get focus, there we go. The rad colored R2 stickers came out pretty sweet. So I've sent out a number of these already. It's the best selling one of the new R2 stickers. Because it's, the raddest, I guess. Great question. Since we're just doing a little bit of Q&A here before they get going, I have heard rumblings of an OnX style offline mapping solution. They have said Waze is coming. And as far as any music services, I'm assuming you're asking about offline. No to that. You pretty much would be stuck to Bluetooth from your phone, as far as I can tell. But we may be getting YouTube music. They seem kind of wishy-washy on that. Heck yeah, Rivian style, baby. Yeah, basically anywhere there isn't snow. Oh man, so I gotta know what would you actually want in an R2 tri-motor? Like, because the dual motor R2 performance has got a lot of power. Is it the power you want? Or would you want a rad version that happens to have more power and comes with, like, let's say maybe an Ascend interior? What is it that would really get your motor going for an R2 rad? This chat is not the easiest to navigate so far. Let me get a bigger window here. Yeah, so the end of year 2026, I still think that means validation units. I don't think that means customer cars. Sorry, that's what I think. I don't.
Good afternoon, and thank you for joining us for
we'll
Rivian's second quarter 2026 earnings call. Today I'm joined by RJ Scaringe, our CEO and founder, Claire McDonough, our Chief Financial Officer, and Javier Varela, our Chief Operations Officer. Before we begin, matters discussed on this call, including comments and responses to questions, reflects management's views as of today. We will also be making statements related to our business, operations, and financial performance that may be considered forward-looking statements under federal securities law. Such statements involve risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are described in our SEC filings and the earnings presentation we filed with the SEC today. During this call, we will discuss both GAAP and non-GAAP financial measures. A reconciliation of historical non-GAAP to GAAP financial measures is provided in our earnings presentation and press release. Just before the earnings call, we posted our earnings presentation, which includes an overview of our progress over the recent months. I encourage you to read it for additional details around some of the items we will cover on today's call. Following our prepared remarks, we will be taking questions from sell-side analysts. In the interest of keeping the call to 1 hour, we would ask these analysts to limit any follow-on questions to one. With that, I'll turn the call over to RJ.
Thanks, Chip, and good afternoon, everyone. Thanks for joining us for today's call. In the second quarter, we began deliveries of R2 vehicles to external customers. We expect R2 to be a game changer for our customers and a driver of Rivian's long-term growth and profitability. Importantly, in the U.S. automotive marketplace, starved for high-quality EV choice, I strongly believe R2 is an attractively priced option for everyday adventures that will resonate with a broad set of consumers. Media reviews of R2 are outstanding. One journalist wrote, quote, "R2 is one of the best new cars I've driven in years." Another praised R2 as among the finest vehicle designs in the world. Early customer feedback of R2 is positive, and I have to say I love it as my daily driver. Strong R2 reviews and increasing brand awareness are directly translating into accelerating customer touchpoints with our products. In the second quarter, we hosted over 57,000 demo drives, a Rivian record. While it's early in our ramp, we are pleased with the reservation conversion we've seen to date for launch edition R2s. Turning to our manufacturing footprint, our team in Normal is focused on the production ramp of R2. As a reminder, R2 production started with a single shift, and we expect to scale to 2 shifts by the end of the third quarter. We are seeing good progress in new team member training and process improvements for the ramp of the first R2 shift. Additionally, members of our supply chain team are spending time on site with suppliers as we look towards supporting the ramp in the back half of the year and into next year. In Georgia, construction of our next manufacturing site is progressing well. The combination of our Normal and Georgia facilities provides Rivian the path to scale to 515,000 units of annual capacity with plenty of room for future expansion. As an update on our Amazon partnership, Amazon now has over 40,000 Rivian electric delivery vans active in its fleet, delivering packages across thousands of cities in North America. In addition to the EDV standard pack variant already on the road, we're developing new variants with a larger battery pack and all-wheel drive to support Amazon's needs. In the second quarter, we surpassed 1 billion miles driven on the Rivian commercial van platform. Turning to our technology roadmap, autonomy remains one of the most important areas of investment at Rivian. In the not-too-distant future, we believe advanced assisted driving capabilities will be a key differentiator for customers and a substantial driver of market share. Our autonomy development is on track, and we expect to begin rolling out point-to-point capabilities by the end of this year. We believe our rapidly expanding car park with R2 will accelerate our data flywheel to enable delivering hands-off, eyes-off capabilities in 2027, and ultimately level 4 capabilities in consumer and robotaxi variants of R2. Since we began monetizing Autonomy Plus in April, take rates are trending positively for the service, and we believe further feature releases will drive continued increased uptake of Autonomy Plus. Later this year, we will host another Autonomy and AI Day where we'll provide more updates around our exciting autonomy and AI progress. At the end of 2026, we are targeting the launch of our third generation autonomy hardware. This includes RAP1, our first in-house designed silicon, and the addition of LiDAR. The development of our RAP1 chip is on track, and we've begun final testing phases of production silicon. Finally, in May, we rolled out our Rivian Assistant on all R1 vehicles and plan to launch the feature on R2 with an over-the-air update later this year. Rivian Assistant is our new AI-powered voice assistant that is built to be a digital co-pilot with integration into the vehicle ecosystem and other external apps. Customers love this new feature and its intuitive functionality across applications like Spotify and Google. In closing, I want to thank our team for their continued execution this quarter. We are laying the foundations for a future that we believe will be fully electric, autonomous, and AI-defined. The reviews for R2 affirm that our category-defining brand and vertically integrated and extensible technology resonates deeply with customers. I couldn't be more excited about the opportunity ahead. With that, I'll pass the call over to Claire to discuss our financial results.
Thank you, RJ, and good afternoon, everyone. As RJ shared, we started external customer deliveries of R2 in June. My family took a road trip in our R2 earlier this summer, and we put the storage capacity to the test by piling in 4 large suitcases, backpacks, golf clubs, tennis rackets, and groceries. Road tripping with universal hands-free is outstanding, making long car rides relaxing. I'm so looking forward to the launch of point-to-point capabilities later this year. As I discussed previously, delivering a strong 2026 exit rate for R2 production and deliveries is a key focus for our team, as we believe it will directly translate into positive automotive gross profit for the business. Turning to the results for the second quarter, our consolidated revenue was $1.66 billion, a 27% increase over the same quarter last year. Consolidated gross profit was $179 million, and our gross margin was 11%. Gross profit included $138 million of depreciation and amortization and $31 million of stock-based compensation expense. Adjusted EBITDA losses for the quarter were $379 million, driven by our $179 million of gross profit and increased adjusted operating expenses as we prepare to scale R2 and invest in our autonomy roadmap. In the second quarter, we produced 12,613 vehicles at our plant in Normal, Illinois, and delivered 12,194 vehicles. Delivery results topped our 9,000 to 11,000 vehicle expectations due to robust growth quarter over quarter in EDV and R1, coupled with the introduction of R2 deliveries. Our $1.14 billion of automotive revenue, a 23% increase over the same quarter last year, were primarily driven by a 14% increase in vehicle deliveries and a $103 million increase in revenues related to automotive regulatory credits, partially offset by a decline in average selling prices from a higher mix of commercial van and R2 deliveries. Automotive gross profit loss was $36 million compared to a gross profit loss of $335 million for the same quarter last year, a $299 million improvement, primarily due to increases in delivery and production volumes, an increase in revenues related to automotive regulatory credits, and an IEEPA tariff refund receivable, partially offset by the ramp of R2 production. In the quarter, we recognized approximately $100 million in incremental cost of revenue due to the ramp of R2 production as compared to the production at more normalized levels. While current macro and geopolitical factors are creating added complexity, cost, and uncertainty, our team continues to work hard to manage supply chain risks and increasing commodity and memory costs. Our software and services segment reported another strong quarter. During the second quarter, the segment generated $515 million of revenue, a 37% year-over-year increase, primarily due to an increase in vehicle electrical architecture and software development services by the joint venture, repairs and maintenance, and Autonomy Plus, offset by lower remarketing sales. $308 million, or 60% of software and services revenue, was attributable to our joint venture with Volkswagen Group. Software and services gross profit was $215 million, a 42% margin. due to higher vehicle electrical architecture and software development services by the joint venture. Looking at our balance sheet, we ended the quarter with approximately $5.3 billion of cash equivalents, and short-term investments. In July, we sold 86.25 million Class A shares in a follow-on equity offering to raise approximately $1.3 billion for general corporate purposes, including the funding of equity commitments and reserves for our $4.5 billion Department of Energy loan associated with the construction of our Georgia plant. Additionally, later this year, we expect to receive $1 billion in non-recourse debt from Volkswagen Group and an additional $250 million equity investment from Uber, both subject to the completion of certain conditions. Our total available liquidity and targeted future capital is over $14 billion to support Rivian's investments in growth initiatives. This includes current liquidity, the Department of Energy loan, and additional targeted equity investments from Uber and Volkswagen Group, which are all subject to certain conditions. Finally, for our 2026 guidance, in early July, we announced we expect to deliver 65,000 to 70,000 total vehicles across R1, R2, and our commercial van, a 3,000 unit increase as compared to our prior guidance. This implies approximately 42,400 to 47,400 deliveries in the second half of the year. We expect deliveries will be weighted towards the fourth quarter as we ramp R2. While we continue to believe our gross profit will increase year over year, we expect the complexity of a new vehicle launch will negatively impact our automotive gross profit in the third quarter, as it did in the second quarter, before becoming a benefit for our overall operations in the fourth quarter as we ramp production and deliveries. As a reminder, we believe this is a transition year for the automotive segment's path towards long-term profitability as we scale R2. For 2026, we expect an adjusted EBITDA loss of between $2 billion to $1.8 billion, a $50 million improvement at the midpoint, due to better than expected revenue related to regulatory credits in the second quarter and increased delivery volumes, which were partially offset by raw material, memory, and logistic cost increases. While economic and geopolitical conditions, including international conflicts, pose risks, we remain steadfast in our plans to invest behind key growth drivers. We continue to progress our autonomy roadmap and the expansion of our sales and service footprint as we scale with R2. We believe these strategic investments will deliver long-term value to our shareholders and customers. Finally, for 2026, we are reducing our capital expenditure guidance by $250 million at the midpoint to $1.7 to $1.8 billion, benefiting from project efficiencies and timing of spend. Our CapEx spend primarily relates to finalizing construction and tooling for R2 and Normal, the continued build-out of our sales, service, and charging infrastructure, and construction for our greenfield plant in Georgia. In closing, I'd like to congratulate our team again for the start of external R2 sales in June and the continued strong execution in the second quarter. We continue to believe that R2 and our technology roadmap will be truly transformative for the growth and profitability of our business. I'd like to turn the call back over to the operator to open the line for Q&A.
Feature. If you would like to ask a question, click on the raise hand button at the bottom of the screen. Once prompted, please unmute yourself and begin your question. We will now pause a moment to assemble the queue. Thank you. Our first question comes from Mark Delaney with Goldman Sachs. Your line is open. Please unmute and ask your question.
Good afternoon. Thanks for taking the questions and congratulations on the R2 launch. Very exciting to see. I was hoping to start there on the R2. Can you share more on how the production ramp is progressing and any examples or metrics maybe you can share on that front to illustrate how the ramp is going? And then as you think about R2 over the next year, do you think the pace of deliveries is going to be gated more by supply or demand?
Well, thanks, Mark, for the question. We're also very excited about R2. Well, I guess first on the production ramp, of course, ramping production of a vehicle, especially where it's a first-time launch of a new vehicle, is complex. It's an orchestration of ramping hundreds of suppliers. The suppliers all need to ramp at the same rate. Of course, our overall production output is throttled by or gated by the slowest moving supplier. And so the coordination to make sure everything's ramping consistently and in an organized fashion across all the different suppliers is really a key focus for us. And it's the reason we start on a single shift and get everything moving efficiently and effectively before we bring on a second shift. So saying that, this is a complex effort. There's lots of moving parts, and we went into it fully recognizing the complexity and having been through this, with R1 and iterations in R1, with a lot of learnings and knowledge as a business that we certainly didn't have to this level with the launch of R1. And so where it stands today is we are ramping. We're continuing to make progress week over week. As you saw, we've updated our guidance to reflect the progress we're making. And the biggest category of focus for us has been supply base and making sure that all of our suppliers are ready to continue ramping to much higher levels as we look at the back half of the year. And in particular, as we start to plan for running, fully utilizing the plant and running across 2 shifts. Now, on the demand side, there's an enormous excitement around the product, and we've been really encouraged by the conversion of reservations to orders on our launch edition. We of course had our own internal projections as to what that would be, recognizing that we're launching with the launch edition, which is a $58,000 version of the vehicle, the most expensive version of R2. And that conversion rate from reservation to orders has been meaningfully higher than what we expected, which is a great signal. Now, of course, with that said, we are looking forward to introducing the other trims, our mid-spec and our base or standard spec, as we look at the early part of 2027. But the excitement even for the launch edition and the higher price point of the launch edition has been very, very high.
Appreciate all those details. My other question was trying to understand what the R2 ramp might mean for the financials and putting that into context with some of the other comments around the input cost environment. So as you look out through the end of the year and start ramping R2, does Rivian still expect to reach a positive gross margin exiting 2026? Thank you.
Thanks, Mark. As I mentioned in my prepared remarks, we continue to expect that R2 will achieve a positive gross profit as part of our exit rate for 2026. And that's enabled, as RJ mentioned, by the ongoing efficiencies of being able to produce R2 at much higher volumes and the fixed cost leverage that will enable within the business.
Your next question will come from George Gianarikas with Canaccord Genuity. Please go ahead.
Hi, everyone. Thank you for taking my questions. I wanted to focus a little bit on the EDV. Can you provide an update maybe on commercial adoption beyond Amazon and as you expand pilot programs for non-Amazon fleets, what's the current primary governor on deployment pace? Is it TCO parity, upfront capital outlay, charging density? Anything you could share there? Thank you.
Thanks, George. I think the first point to just call out is the ramp up that we're seeing within Amazon. And so you're seeing this already in the numbers of the first 2 quarters this year, that Amazon is purchasing more vans. We're ramping up meaningfully from where we were in previous years. And that's absolutely a reflection of the TCO advantages that our EDV platform represents and enables. And we think that those cost benefits that are being so clearly realized by Amazon and so clearly evidenced by their ramping up of volume, we think that's going to translate to other commercial operators ultimately seeing those cost benefits and recognizing both to remain competitive, but also to address their own cost structures that they're going to be pursuing opportunities with EDV. Now, that has taken longer than we would have expected or we would have hoped for in terms of other fleets adopting a strategy towards electrification and a strategy of adopting not just an electric vehicle, but a highly connected and intelligent vehicle. But the signal that's being sent through Amazon's significant ramping of this is really outstanding in terms of a billboard for the capability and a billboard for what the EDV is possible delivering from a business point of view.
Thank you. And maybe more of a long-term question. As you continue to benchmark other global EV platforms, particularly from Chinese OEMs, what structural or operational lessons can you apply to, the R3 and other future vehicles as you spec those out and try to build them? Thank you.
Of course, the auto industry's a business where every manufacturer is very aware of what our other manufacturers are doing. So Rivians are purchased by probably every car company in the world and taken apart. And similarly, the Chinese vehicles are purchased by many different, both OEMs, but also benchmarking companies. And so as a result, there's not really a magic difference in terms of how a Chinese vehicle is built relative to a vehicle built in the West in terms of the manufacturing approaches, the joining technologies, the use of high pressure die castings, consolidation of stampings. Those methods are being deployed across all, call it best in class vehicles from a manufacturability point of view and a vehicle architecture point of view. We see that, of course, evidenced in how we're building the R2. Use of high pressure die castings and an extreme focus on part consolidation and part elimination. I think the big difference that exists between U.S. cost structure and Chinese cost structure is the input cost. So you have a much, much lower labor cost in China, much, much, much lower capital cost structure, where in many cases the capital cost is zero, meaning it's being provided by the local government. And that compounds across the supply chain and all the way up through the OEM, and it results in a materially lower cost than what it would take to produce in the Western world. And so that naturally opens the question around trade policy, and importantly, it opens very complex questions around supply chain strategy. And we're navigating a lot of those complexities around sourcing our components and our, not just our tier one, but even down to the raw materials, where those are coming from, recognizing the frameworks that have been established around trade. And in a world of completely open trade, it would look, our supply chains would look very different because we'd be optimizing purely around cost, which would be, of course, optimizing around countries that have the lowest input cost structure, the lowest labor costs, lowest energy costs, lowest land costs, lowest cost of capital. And of course, that's not the world we work in. We work in a world where there's very intentional industrial policies that exist that change the way we might be able to look at this. And in many cases, there's implications around certain components where we believe it's very helpful to make sure those are sourced from the United States.
Thanks.
Your next question comes from Shreyas Patil with Wolfe Research. Your line is open. Please unmute and ask your question.
Hey, thanks so much for taking the question. I was curious if you could maybe unpack the $50 million increase in adjusted EBITDA for the year. How much of that is tied to the better regulatory credit sales? And then how should we think about input cost inflation?
Sure, Shreyas. As you look at the evolution of our EBITDA guidance, so we were able to improve the bottom end of the range by $100 million. That moves the midpoint $50 million, as you stated. We had higher than anticipated regulatory credits in the first half of this year. And then as we look ahead, we have the added benefit of the incremental delivery volumes with the increase of 3,000 units in our outlook. But offsetting that, we have headwinds associated with increases in raw material cost, increases in memory cost, as well as increases in logistics cost that had us arrive at this specific EBITDA range and outcome. And so as we look at the second half performance relative to the first half, what you can anticipate seeing is on the gross profit side, as I mentioned in my prepared remarks, we'll continue to see some of the inefficiencies and complexities associated with the R2 ramp impact Q3 automotive gross profit. And then we'll start to see some of the tailwinds of the scale and volumes kick in the fourth quarter. And then beyond that, we'll see just the ongoing investments that we're continuing to make across R&D and specifically the growth in our autonomy spend, and then the continued fixed cost leverage that we'll see as we're growing our sales and service footprint, but certainly growing sales much more rapidly as well.
Okay, thanks. And then maybe just on the Autonomy Plus. So you're going to be launching the point-to-point solution later this year. I'm curious where things stand today with Autonomy Plus. Just if there's a way you can give us a sense of take rates or kind of adoption trends, and then how you see point-to-point driving both demand, but then also those take rates. So ultimately, the subscription revenue opportunity. Thanks.
We've been really encouraged by the take rates on Autonomy Plus to date, and I think in particular, what's really encouraging is to see the status that we're at today in terms of customer engagement, customer usage of the feature, and then of course related to that, the take rate around paying for Autonomy Plus. But we have very clear line of sight and visibility into what's coming. And so as encouraged as we are with the take rates today, we're quite confident that that will expand meaningfully as we add in additional capabilities and features. And there's going to be a whole, think of it as like a staircase of features that ultimately leads us to very high levels of autonomy. But a really important step that's happening in the very near future is that the capability of point to point. And just to restate what that entails, that means you can get into the car, type the address into the vehicle, and the vehicle will completely drive itself to that address. And initially, that will be a feature in which it's like level 2++, where your hands are off the wheel, but your eyes are still primarily on the road. Meaning you can look away for short, extended moments of time, but you're not in a position to officially be reading a book or be responding to emails. Now, the step in 2027 is going further, where we go not only hands off, but also eyes off. And that's really important, because then not only is the vehicle fully driving itself and navigating to the address, but importantly, you're able to truly get your time back without the vehicle dinging at you, say, to keep your eyes on the road, but actually be able to read a book, be on an iPad. And so that's really, into the true, as per the definition, level 3 capability. And then of course, into 2028, that's when we bring on level 4, and that's where the vehicle's capable of operating as a robotaxi, meaning there's no one even needed to be in the driver's seat for any operation of the vehicle. And you can put occupants in the back. You can use that capability for robotaxi applications, but you can also have that, which is one of the things we've been very excited about, have that as a really nice feature on an owned vehicle. And so we think of this as personal level 4, where your own personal vehicle can drop you at the airport. It can pick your kids up from school. It can go to the grocery store and grab things for you. And that roadmap is something we're not only very excited about, but we think will fundamentally drive, increasing levels of adoption on Autonomy Plus and its future variants, as we've just described. Now, with all that said, we also think we're at an inflection point from a consumer behavior and consumer mindset, where historically autonomous features were not the primary purchase criteria for most customers. Of course, there's technology early adopters for which this has been top of mind for them for some time. But for the vast majority of customers, this wasn't the driving purchase criteria. We think this starts to emerge to be much more of a primary purchase criteria. And it's one of the reasons we've made the decision to invest so heavily here. We think ultimately market share is going to be driven by the capability of the vehicle to drive itself. And of course, linked to that, the vehicle being software and AI defined. And those are two very critical pillars of our technology roadmap and technology strategy.
Your next question will come from Rajat Gupta with JP Morgan. Your line is open. Please go ahead.
Great. Thanks for taking the question. I had a question on the R2 customer profile. Any early reads on, what that customer is proving to be, existing electric vehicle owners, first-time electric vehicle buyers, Tesla cross shoppers. Just curious if you have any read on, the customer profile of the early R2 orders. And have a quick follow-up. Thanks.
Thanks, Rajat. The goal in developing and designing R2 is to have a very diverse set of customer profiles, meaning customers that were coming out of a wide variety of form factors, coming out of a wide range of brands, and from a broad spectrum of demographics. And that was the intent, that was the target. We now have the benefit of being able to see the data to see who is actually buying R2s. And the great news here is that it is exactly that. We have a very diverse customer set coming out of a broad range of vehicles, which I guess perhaps shouldn't be too big of a surprise. The mid-size SUV segment, the 2-row 5-passenger segment, is the largest segment by far in the U.S. market. It's generally the largest segment globally as well. But the way that we've been able to really thoughtfully execute this vehicle in terms of packaging, storage capacity, performance, range, efficiency, driving dynamics, both on-road and off-road, has created a very wide net for attracting this very diverse set of buyers. And maybe one of the most exciting metrics here is we have a significant number of first-time EV owners, and that's really powerful. So for someone to have their first time owning an EV be a Rivian, and for that bond with the brand, so to speak, to be created through that first time ownership is powerful. But it also illustrates the strength of what we've created in terms of the product and the product market fit, that this is mobilizing demand for EVs that's been latent, that's been sitting on the sideline, because the product that sort of would motivate someone to move from an ICE to an EV hasn't existed until R2. And so this is a great metric. Now, of course, there are EV buyers that are in the mix. You have folks coming out of Teslas or folks coming out of Rivian R1s, but the most important metric here is the very significant number of folks that have not owned EVs before.
That's great color. And just to follow up, for Claire, maybe I noticed in the second quarter gross profit commentary you mentioned an IEEPA tariff refund benefit. I'm curious, how much that was, and because I didn't see it in the full year outlook. And then just relatedly, it looks like the guidance implies a steeper EBITDA loss in the second half versus the first half, despite the positive gross margin exit rate commentary. Just trying to bridge those two aspects. Thank you.
Sure. On the IEEPA tariff refund piece, as we mentioned in our earnings call last quarter, we sized the IEEPA tariffs in the tens of millions of dollars. The receivable that we booked this quarter is roughly half of the total. And so the receivable is related to the refund of the amount of anticipated proceeds that are not subject to the existing DOJ appeal. And then as we think about the second question on the EBITDA loss being steeper in the second half of the year, one of the big differences there is we did have $164 million of regulatory credits that benefited our gross profit outlook in the first half. And so as we look at the second half of the year, we'll see, again, some of the complexity associated with the R2 ramp impacting automotive gross profit in the third quarter before showing progress in the fourth quarter. But the bigger driver is really the absence of regulatory credits in second half versus first half, and then the ongoing investments in R&D and SG&A.
Understood. Yeah, that's helpful. Thanks for taking the question, and good luck.
Your next question comes from Itay Michaeli from TD Cowen. Your line is open. Please go ahead.
Great. Thank you, everybody. Just first, a couple of questions on the R2. RJ, 57,000 demo drives. It's a big jump sequentially. Hoping you could talk a little bit about what you're seeing in terms of conversions of those drives into orders, how many people are actually experiencing Autonomy Plus. And then secondly, just curious whether you do expect to deliver a material amount of the premium trims this year, or will R2 sales just predominantly be the performance trim this year?
Yeah, I mean, we're really excited, as I said in my opening remarks, of 57,000 drives this past quarter's a record for Rivian. And so just the delivery of that, just enabling, that number of drives, you said roughly doubling where we've been in the past. The team has had to really come together, and we did a lot of prep knowing that the amount of excitement around R2 was going to drive a significant increase in both exposure of the brand and touch points of the brand, but of course that's manifested through these test drives. And so with that, we're not providing specifics around conversion, but that's a really important metric we look at internally, and that actually links pretty heavily to the availability of the other variants. And so to start, as you said, we have our performance variant, our the most expensive variant of R2 that we've launched with. We'll be introducing the premium and then our standard trims as we look at early 2027. But we are witnessing a higher level of conversion than we expected, meaningfully higher than we expected, into the launch edition package, which was great. It's super encouraging. I think reflects just the amount of excitement around the product. But saying that, we fully recognize and are excited to also be launching the other trims and know that those will be coming, as I said, at the early part of 2027.
That's great to hear. And then, Claire, maybe just a quick follow-up. R&D, I think, was flat sequentially. I know you're making a lot of investments in autonomy. Just curious how we should think about R&D kind of trending in the second half of the year. Thank you.
Sure. As we look at the second half of the year, we do anticipate seeing a step up that's predominantly related to GPU sourcing for our autonomy training that will continue to ratchet up over this course of the second half of the year. In the second quarter, there we saw some level of reduction as we're now in production. So there was a decrease in our engineering design and development spend, but we did underneath the R&D spend still see significant increase in terms of our overall autonomy spend.
That's very helpful. Thank you.
Your next question will come from Joseph Spak with UBS. Your line is open. Please go ahead.
Thanks, everyone. Just maybe, the comment about the $100 million of incremental cost of revenues because of ramp of R2 compared to normalized levels. Just maybe some context, like what are you classifying as normalized? Is that one shift, two shifts? And are you also assuming a more normalized mix in that analysis?
Joe, the way to think about it is the 100 million reflects a combination of ramp-related inefficiencies, such as expedited freight cost out of the gates or short-term premiums with suppliers that we anticipate coming off as we increase our production volumes over the course of the next couple of quarters. And then it's also costs that we expensed in period that would have naturally been absorbed into inventory, for example, if we were at more of a Q4 run rate of production volume. So that's a little bit of the way to think about how we've sized the 100 million of estimated ramp cost.
Okay, so yeah, that's what a portion. I mean, a good portion of that is just like you don't have the scale and leverage over the asset. So if you're saying, second shift comes on at some point later in the year, and you're exiting gross profit positive, then that's sort of that could help us sort of triangulate sort of like the units you think you need to sort of be close to break even. But that's a fair way to think about it.
That's generally a fair way to think about it. And so as we talked about it being really at sort of Q4 normalized levels, that's not the full extent of R2 fully ramped up,
right?
But is in the near term a more normalized production environment that we can compare our standard cost to.
Okay. And then RJ, appreciate the Autonomy Plus commentary earlier. Was wondering if you'd also give us the latest update on just Wrap 1 and Gen 3 hardware and any progress. Is that still on track for SOP later this year?
Yeah, our in-house silicon Wrap 1 is on track. As you know, and that underpins what we call our Gen 3 autonomous hardware platform. And so both the Wrap 1 along with the rest of the upgrades to the system are on track for later this year.
Thank you.
Your next question will come from Dan Levy with Barclays. Your line is open. Please go ahead.
Okay, great. Thank you. I just wanted to start with a question for you, Claire, on just unpacking the COGS per unit on Joe's question there. To only see COGS per unit up a few $1,000s quarter over quarter, despite that incremental $100 million, says that there's probably something incrementally that's going on quarter over quarter on the cost side, whether it's within EDV or R1. So maybe you can just help unpack if there's other underlying cost improvements and why we're not seeing maybe what should have been maybe a step up in raw material pressure in that cost per unit.
Sure. As you look at the quarter, we had $96,700 a unit of COGS. If you were to back out the $100 million on a per unit basis, that's about $8,200 a unit. That would have gotten us to $88,400. That's about a $5,000 per unit improvement on a quarter sequential basis relative to where we were in Q1. One of the biggest drivers of that improvement is through the volume that we saw in the quarter as well. So that's going to continue to be a key theme as we'll see our COGS per unit continue to come down over the corresponding quarters of this year. And then beyond that, we did also have the IEEPA receivable that was also benefiting this quarter.
That would have been revenue, or was that booked in COGS?
Booked in COGS.
Okay. Okay. Thank you. As a follow-up, RJ, I want to ask something that I know you've addressed in the past, but I think it's important just in the early days of the R2 ramp. If we look back to R1, the days of R1 and the early ramp, you probably bit off a bit more than you could chew, which is something I think you've acknowledged. There's a lot going on, a lot of different configurations. And if we look now, I know you talked about focusing on just the launch edition, but broadly within Rivian, there are a lot of different initiatives between Wrap, and I'm sure there's multiple other future iterations planned. Your autonomy roadmap, what's going on with network architecture, and then also just Mind, also just a number of different initiatives here. So maybe you can just talk us through how this time is a bit different versus R1, how you're approaching R2 execution, given that you still have a lot of things on your plate, and how you're looking at resource allocation in this environment.
I mean, it does seem in some ways like yesterday we were launching R1, and then it also seems like it was a very, very long time ago. But with that said, the company that's launching R2 today is a very different business than what launched R1. And I say that with regards to the maturity of our processes, the maturity of the team, the maturity of the development sequencing. And when we look at the launch and what we're going through today in terms of ramping production, ramping suppliers, what we're experiencing today is actually an artifact of what we did in the 2 or 3 years leading up to it. And so a big difference between R1 and R2 is the structured approach we took to what we call design validation builds. So those are vehicles that were to production spec but built on our pilot line. We went through multiple iterations of that. And then subsequent to that, our manufacturing validation builds, where it was, of course, the production spec, but built in the manufacturing plant. And the MVB builds, those manufacturing validation builds, started at the very beginning of this year, at the beginning of 2026. And so that gave us time to work through issues around ramp, work through issues around design elements, of course, supplier-related issues as we were doing those validation builds, And so the number of unexpected surprises in now the production ramp up of R2 is far lower, like incredibly, it's an incredibly different situation than what we had in R1. Now, that's not to say there aren't surprises. It's, as I said at the start, building and launching a new car is just an inherently very, very complex activity. And it's complex if you're, a company that's been building cars for 100 years, or it's complex if you're Rivian. And so we've done everything we can to prepare. But, as we now are going through the ramp, we're still, being very thoughtful around how rapidly we ramp up our supply chain, making sure that all of our suppliers can ramp consistently, planning that very thoughtfully before we bring on the second shift. And a big enabler to help make that ramp process more seamless and more straightforward was the simplification of the product relative, certainly to what we did before. As you said in R1, we didn't just launch R1, we launched R1T, R1S, and a commercial van all within the same 3-month window. And then we had a very complex set of build variations, essentially, thousands of different possible build combinations for the R1T and the R1S. And in sharp contrast to that in R2, we have a very limited set of build combinations that we're building today, which is all embedded in the launch edition. Even within that, we've limited the number of color combinations. And so that was not an accident. That was highly intentional to facilitate a smoother and faster ramp. And that the decisions that we took around what combination of features we would have in this launch edition was also something we thought about a lot. And as I said before, we had a whole bunch of our own expectations around what take rate would be to convert a reservation into an order for the launch edition. And we've been pleasantly surprised that conversion from reservation to order has been notably higher than what we expected, which is great news. And that doesn't, of course, mean we're not going to launch those other variants. So for any customers that are waiting for a standard trim or a premium trim, don't worry, we're on it. But those will be coming in the early part of 2027.
Great, thank you.
Your next question will come from Andrew Percoco with Morgan Stanley. Your line is open. Please go ahead.
Great, thanks so much. Can you guys hear me?
Yes.
Awesome. Well, I guess before I get to my question, I do want to say I was 3 out of the 57,000 demo drives that you guys, talked about. So as a potential future customer, I just have to give you guys some kudos here on what you've done with the R2 and just recognize that up front. But I guess just to get to my question, we talked a lot about autonomy already, but I'm just kind of curious how you're thinking about the pricing side and potential uplifts to ARPU as you go to point, and then eyes off in 2027, and how you're kind of thinking about enacting, those pricing changes over time.
Yeah, we certainly believe there's opportunity to grow pricing for our autonomous capabilities as we add those capabilities, but we believe very deeply that needs to be earned through the expansion of the feature set and expansion of the capability. I'd say the other element here, which we have to be cognizant of, is just the market dynamics around this, and I think it's going to be a very quite fluid around how some of these features get priced. As I said, we're going through an inflection point where customers are going from this being a nice to have feature in terms of advanced autonomous capabilities to a must-have feature. There's a growing awareness around that capability set. And I really believe the transition to level 3 capabilities, where you can go hands off, eyes off, makes it much easier to implement or to use the feature. It's much easier to understand. Early adopters, it's fine to say you have to be hands on or eyes on the road, but you can be hands off. But for the broad, full spectrum of customers, it'd be much easier to just say the car will drive itself. You don't have to look at the road. You don't have to touch the wheel. And we think when that happens, it'll make it far easier to explain, far easier to see mass scale adoption well beyond just early adopters. And with that, the desire and the expectation for these features to be in technology forward vehicles. And so ultimately what the pricing potential is there is something that we're actively spending a lot of time ourselves thinking about, but ultimately we believe it represents an opportunity to expand pricing beyond where we are today.
Got it. Okay, that makes a lot of sense. And then I was just hoping you can talk a little bit about this new California rebate program. In my understanding, it does require some level of OEM buy-in. So I'm just kind of curious if that's something you're planning on participating in, and whether or not you've started to see some incremental demand from that program.
Sure, we're really happy with the California EV incentive program, and consistent with our mission, we're really excited about the opportunity to attract new first-time EV owners into the Rivian community. So for the program, it's $3,500 for new vehicles and $1,750 for used vehicles, with the OEM and the state of California splitting the share of those incentives. There are caps by OEM, and so there will be limitations in terms of the full population set that can take advantage of some of these incentives.
Understood. Thanks so much for the questions.
Your next question will come from Chris Pierce with Needham. Your line is open. Please go ahead.
Oh, hey, good afternoon. You talked a lot about conversion. I guess I'd love to hear the flip side of that. Like, what are customers that aren't converting telling you? Are they, they put in a reservation a long time ago, they're waiting for a different variant? I guess I'd just like to hear about people maybe falling out.
Well, thanks, Chris. Yeah, of course, there's a long list of reasons that someone may decide not to convert, but the biggest is they're waiting for a different build combination than what we have in the launch package. So that's by far and away the most common reason for someone to not convert a reservation into an order. But as I said, recognizing that conversion rates are higher, that's been something we've had to dynamically really watch super carefully, because we're providing delivery windows to our launch edition customers, and that requires us to make projections around what the conversion rates will be. Ultimately, when you think about working through the backlog of reservations. And so the way that we've tried to provide guidance on this is representative of thinking about those conversions, but ultimately beginning the delivery of those different trims in 2027.
Okay. And then I think you mentioned you might have another Autonomy and AI Day this year. Could this be I mean, it's been a while since the IPO and, long-term financial targets were put out. Could this be something where, things have changed for better, for worse, for the better now? Like, could we see updated long-term targets for people to sort of anchor around?
For the Autonomy and AI Day, it will be more focused on the technology roadmap. We're working over the coming quarters to think about the right time to set up a broader-based investor day as well that would be more focused on longer-term financial targets. But this one, RJ, I don't know if you want to provide a little bit of context of some of the updates or plans for the day itself.
Yeah, we had our first Autonomy and AI Day last year, and in it we pulled the curtain back on a lot of the technology development that had been underway for quite some time within Rivian. So that was our in-house silicon program, the roadmap to level 4 capabilities. And subsequent to that, we've now announced a few important things. One of which is the deal that we've done with Uber for our robotaxi program, which, as I said earlier, is going to be available, and we're targeting for that to be available in 2028. But there's a lot of other details that we'd like to provide around what that roadmap looks like. We'd like to show the progress that's happened on the vehicle beyond what's in customer vehicles today, but actually from a technical point of view on the path to level 4. And of course, our objective is to provide better visibility and therefore rethink higher level of confidence around what those targets, around achieving those targets.
Okay, thank you and good luck.
Your next question will come from Philippe Bourgeois with Jefferies. Your line is open. Please go ahead.
Yes, thank you and good evening. My first question is on the relationship with Uber. We've seen some tension between Uber and Waymo and their cooperation. And of course, there's a bit of uncertainty about the financial stability of Lucid and the fact that Lucid worked with Nuro, so it's not as integrated a solution as what you offer in the partnership with Uber. So I'm just wondering how much of a upside to your relationship there is, maybe not in the timing, but in the magnitude of what you could be working with Uber in terms of offering robotaxis?
Well, a core element of our approach is a strongly held belief that vertically integrating the vehicle and the technology stack together allows for meaningful both cost advantages and technical simplifications in terms of the vehicle architecture and autonomy hardware architecture. And so that means how sensors are integrated into the vehicle, the redundancies built around the controls, the way that we've architected the compute platform and the inference. In our case, because we brought silicon in-house, we have a very low-cost way to achieve very high levels of inference within the vehicle. And so we believe that the technical approach that we've taken from a hardware point of view creates a structural, a cost structure, I should say, that's highly advantaged for delivering level 4. Along with that, we believe that the fact that we're building a neural net-based approach, an approach that's an end-to-end trained model with what we call LDM, our large driving model, means that the progress that we make on the consumer platform, so that's point-to-point, hands-off, eyes-off, level 3, ultimately getting into level 4, that LDM workflow is identical across all those different steps. So that staircase up to level 4 is not is one work stream. It's not multiple work streams where we have a level 4 platform and a level 2 platform, but rather there's one LDM, one end-to-end trained model, and the vehicles will have slightly different sensor topologies to cover corner cases differently between, let's say, a level 3 and a level 4 vehicle, and along with that, slightly different inference capabilities built around RAP1, but from a platform, from a model point of view, it's the same. And so that was a key shift for us, and I think it's a key shift for the industry in terms of how we approach autonomy, that historically prior to, let's say, 2022, 2023, the technology topologies used for level 4 were very different than the topologies used for level 2. And we've seen that merge with the approach of using transformer-based encoding and these end-to-end models that is really to the advantage of our architecture and to the advantage of the data flywheel that exists through the deployed fleet that we have.
But specifically on Uber, do you think there's a big opportunity for you? Because when you announced the partnership, you were one of several partners that Uber was working with. Is there an opportunity for Rivian to be actually a much bigger partner of Uber in autonomy?
Well, I'd say the working relationship with Uber has been fantastic. From the top of the organization through the working levels of the organization. So the engagement from Dara in terms of the importance of this relationship, along with the working level teams, it's been very positive. We're working towards our next milestone at the end of this year, and deploying in a couple of cities in 2028, and then rapidly growing following that to a large number of cities. And so this is, we're quite encouraged by the relationship and the partnership. But ultimately, I do believe that the focus we have, and the focus I think appropriately where we're placing our energy, is making sure that the technology is ready. The vehicle is capable of delivering level 4 performance and doing it in a thoughtful way in terms of really clean execution at the vehicle level and really cost-effective ways of delivering that capability.
Right. And then maybe more for Claire about the ramp. And I think you still haven't told us exactly how many R2s you delivered. It's just maybe a handful. But you had warned us about the risk to gross margin as you ramp up. And in fact, I know there was a bit of outside help in Q2 from AIPA, from ZEV income. But the dip in the gross margin has actually not really happened. And now you're warning us that it could be in Q3. I'm just wondering, is it because the ramp really hasn't happened that much on R2 in the second quarter, or has it actually happened in a smoother manner than you feared? And of course, you're cautious about Q3, but we could have a positive surprise in the Q3 gross margin as well.
As we think about the second quarter, you can think about us converting from a pre-production environment to our start of production and then start of our cost structure, hitting our cost of goods sold for roughly 2/3 of the quarter. So it was not a full quarter's impact. And so as we look ahead to the third quarter, we'll have a full quarter's impact of the ramp. We'll also, as RJ noted, have the introduction of a second shift of operation, and so some additional labor cost associated with the ramp as well. And then in the fourth quarter, that's where you'll start to see the benefits of scaling production, the fixed cost leverage, both across R2 as well as the broader plant. And then with that, maybe I'll also invite Javier to jump in as well, just as we think about driving towards manufacturing efficiencies and executing the ramp in the second half.
Yeah, thank you, Claire. Indeed, there's a big focus, laser focus of the teams in Normal to ramp up this first shift. That's what we started in quarter two, and we continue in quarter three with the preparation of the R2. We are not expecting any material contribution to volumes with the second shift in this quarter, but we will see it in quarter four. The capability of the teams has very much increased compared to the launch of R1, and that's a big advantage. I mean, the winning teams are the ones that are capable to solve problems at the speed. And that's what we are doing now, focusing on training of the members in the assembly lines, training the team, the automation, and getting the output higher and higher as we ramp. And then, of course, focusing on the supply chain. That is always not surprise. I've lived many launches in my life, and always the supply chain is a part that requires special attention. So we are focusing on a handful of suppliers with boots on the ground, and with a great example of collaboration where the suppliers are really willing to get our support, and we are willing to give them. So that's the focus in Normal today.
This concludes the Q&A section of the call. I would now like to turn the call back over to RJ Scaringe for closing remarks.
Thanks, everybody, for joining us on today's call. Hopefully you're observing a lot of excitement from the team here around R2. That excitement's echoing the excitement that we're seeing from consumers, and it's ultimately been something that we as a business have been building towards for a while. The ramp that we're going to see in the second half of the year, so Q3 into Q4, as Javier just described, with Q4 being a really important element where we start to see the benefits of our second shift online. That's a major focus for us, and our operational teams, our engineering teams, our customer-facing teams are all very much aligned to be focused on delivering on that ramp. And as you also heard, we're continuing to focus on our technology roadmap. So that's continued progress on our software-defined architecture, and as we really think of it as our AI-defined architecture, so vehicles that have a growing set of features and capabilities. That growing set of features and capabilities allows not only the vehicle to create a better customer experience, but exist within our ecosystem more efficiently. And then, of course, the enormous emphasis that we have on our self-driving platforms, or self-driving platform, and growing capability over the course of this year with the introduction of point-to-point late this year, and then ultimately expanding that in 2027 and 2028 to ultimately get to level 4. And so this is the exciting time for us as a business. We see it as an inflection point for us as a business as well, both in terms of our path to profitability, but also in terms of the scale and scope of the business, given the mass market nature of R2. Once again, thanks everybody for joining today's call, and look forward to future discussions.
All right. So that pretty much wraps it up, I believe. So let's get to some Q&A. Good stuff. Right at the top of the hour here, pretty much. So if you have questions, now is the time to get them in. I know you have to be subscribed to the channel to be able to ask, so we have a little bit less engagement than in the past, but I thought it was only fair to, to reward those who are here, showing up, and part of the deal. So what do we got here? I got a few questions here towards the end. I'll pop them up on the screen here. I'm happy to answer them. As long as you guys have questions, I'm here to answer them. So let's do it to it. Chris, I saw this question about a 5-year head start. Tesla actually has longer than a 5-year head start in some regards because the FSD program started a really long time ago. They've been promising, that New York to LA car drive on its own since 2016. Short answer is the only ones that are considered L4 are the robotaxi. But even then, it's highly gated by geography and situations and cities that have good weather. Are they going to expand? Probably, but in the grand scheme of things, the only meaningful L4 fleet in America is Waymo. So we will see. There's definitely room for contenders. And I would also argue that even though Tesla's been working on this for about 10 years, in reality, the version that they're on right now, the sort of approach they're on, is really only a couple years old. So they don't have quite the head start that everyone likes to give Tesla credit for. Tesla has an amazing FSD program from a feature perspective, but it's not perfect. It makes mistakes. I think a lot of current users are misusing it, and it has a low adoption rate. So what does that tell you? I mean, it is both impressive and not there yet. And until the automaker takes legal responsibility, it is not even an L3, let alone an L4, in my opinion, for customer-owned vehicles. So let's see what we got here. Yeah, I agree with this. And there seems to be a lot of hand-wringing over the out-of-spec video about range, but it's important to note that a consistent 70-mile-per-hour test saying it missed EPA range is, I mean, that's in defense of those who believe that, that's how it was presented by the people who did the test, but that is not how EPA cycles really work. It's the test is the test, and they legally can't really lie about that without some serious repercussions. So yeah, I would take that with a grain of salt. I very much agree. I really want Lucid to survive as well. They have really nice products. Obviously, they have great engineering from a hardware perspective. The biggest thing that's letting them down, in my opinion, is twofold. One is the big one is software. Certainly price is sort of part of that packaging, but that's sort of in the same bucket. And just price overall. Yeah, they're too dang expensive. We're seeing this, R1's already pretty well saturated. It's the best-selling vehicle over 70 grand that's electric in the US and in several states, at least California, and I think at times Washington. It's the best-selling 70K plus vehicle, gas or not. But the market is below that. So, you can be the big fish in a small pond. Who cares? You got to sell a lot of dang cars to be profitable. Yeah, I think Q3 2026 definitely going to be cost heavy still until they they continue to stick with the idea that they're going to boom production in that fourth quarter. So let's see what it is. Also, thanks for the jewels. I'm not entirely sure what those are, but I'm sure that they probably cost money either way. Thank you for the support. Much appreciated. For those of you who joined late, sorry, I'm not going to recap an hour in a few minutes to be respectful of everyone else's time, but the recording of this will be live, and I will run the transcript through some AI to get you some chapters so you can pop around and find what's up and what's interesting and what parts you want to listen to the most. Yeah, I think a lot of times the after hours isn't really reflective. I think we'll see what it does tomorrow. Again, this is not designed to be a stock-focused channel, but I do think it's important to the health of the company. And as we saw here, there's shifting in timelines that happen. So, the point of premium probably not coming till next year now, I think is very interesting. They continue to beat the drum about Wrap 1 coming at the end of this year. I still think they're picking their word choice on that very, very carefully. they're definitely going to participate in that California EV rebate program because the freaking bill was signed on the hood of a Rivian in a Rivian facility. All right, see if I can get caught up here. Don't be too far behind. I don't think that they're participating quite yet. There's some paperwork components to that. As soon as I get wind that it is like green lit, I will include it in a newsletter and or a video. So I will try to keep you abreast of that. No update about the 2027 R1S, unfortunately, but we could easily see that come like next week. So I think that'll be interesting. Yeah, my take on the range, I think it's overblown. I think people are making a mountain out of a molehill, personally. The fact that the charging is a little bit better than expected is good, but I think even more important than that is actually the thermals for the charging. Because the thermals, especially in Gen 2, were subpar, and they seem pretty excellent in R2. So that means not only is the charging rate in general going to be pretty solid, not amazing, but pretty solid, the thermals should allow it to do that basically every single time, and that's way more important to me than something that can peak, but it gets slightly warm and it falls apart. We don't want to see any of that. It's one of my bigger complaints about the current Gen 2 R1 platform. Yeah, so robotaxi, I think it has remote operators that can step in. So it's a bit of a nuance, but Waymo does as well. Most of the time the car is operating by itself. But when they have certain situations where the car will not just go through, so an example of that is actually if a stoplight is out, it phones home and asks an operator, what should I do here? And that was a big problem when San Francisco lost power and like the whole city lost traffic lights. They had a big influx of operators need, then they actually had operators to fulfill that need. So level 3 autonomy. This is a little bit different, right? Because this is talking about very limited situations. And at times, RJ has said level 3 will come to Gen 2. He said it with some asterisks and that it will be better on Gen 3. I think it's probably going to end up sort of like how right now on Gen 2 vehicles, even if you have Autonomy Plus, and this part will change, but a good example is if you want to do lane change on command today, there's only certain zones that are pre-approved. I think we're going to see a similar kind of scenario where certain divided highways and certain sections of those divided highways become eligible for level 3 on Gen 2, if anything. So I think that's probably the upper limit of what we're going to see and or expect on Gen 2 autonomy. So that's kind of my thoughts on it. No, I don't, about the range. I do not expect any widespread pushback, to be honest. I think most owners don't watch people like me or out of spec or whatever. They might see a headline that says that the range sucks, which is unfortunate because people are like, oh, it says 330, but it did 250. It should have been closer, but that also sort of distorts what the EPA cycle is intended to show you. It's intended to show you a mix of real world use between city and highway. So I think at the end of the day, it's going to be a nothing burger. Yeah, I don't think you should be holding back if that's the thing. I think that's an overblown thing. Yeah, that's cool about Zoox. I know that we got the legislation pushed through for that, where vehicles were allowed to sell with no steering wheel. That was even brought up a few years ago when the Apple car was still sort of on the table and they were burning $10 billion to go make that. So, yeah. Yeah, I hear you. I would like a sample size greater, an N sample size greater than 1. I'm not saying that they're wrong, but it is one data point, and I would like to see more data points before I start taking it more seriously. Your question, it sounded like they will keep selling launch edition, launch package performance as long as demand holds. And only shift to wrap 1 and LiDAR afterwards. I think it'll be interesting to see how this rolls out, because I suspect that part of the delay was probably more because of wrap 1 than LiDAR, because of this whole AI crunch it's not only killing prices for memory and storage, it is equally killing the availability of TSMC to produce chips at all for anyone at any price. So they have to kind of, work their way in, be willing to have a high price tolerance. They might be trying to see if there's some price relief if the market corrects a little bit. But most predictions show it's actually just going to continue to get worse throughout at least the next 18 months. Yeah, so this comment thing's not scrolling real well, but yeah, as far as the $3,500 off at point of sale for first-time EV buyers in California, I don't know a timeline of when it's going to actually light up, but soon. I think that will be great. So if you're a first-time EV buyer, the cool part is because Rivian, like Lucid, has an office in the state of California, they are exempt from the vehicle price cap disqualification. So as long as it's a first-time EV for you or your spouse, I think you will be good to go here very, very soon. All right, I'm trying to get through these. EPA allows automakers to reduce the EPA as much as they want. So Rivian is partly responsible. If you actually note the EPA numbers that came out, which was a self-imposed test, but it was as per the EPA criteria, Rivian did trim their EPA slightly compared to what the cycle tested in a similar sort of quantity as what they did with R1 vehicles. So I don't think that that's really, I don't think there's any like sort of funny business going on here. Yeah, we gotta see more iX3 and EX60 data here in the States. Similar conditions, similar wheels, similar geography, similar climate, all those kinds of things. Totally agree the market is at or below 50K. Even though the average car price is just, floats to that 50K mark, I think that the bulk of the market is really interested below that, especially when you look at how expensive everything else has gotten. That really big purchase, if it can flex lower, would be great. All right, let's see what else we got. Yeah, cool. Thanks again for those, Jules. I'll figure out what they are later, but thank you. I appreciate it. Yeah, they still say into 2026 for point-to-point, but I would just to clarify actual customer expectation. I think that Rivian sort of has to say that for the stock. I think it is unrealistic to think that the entire fleet is going to have point-to-point by the end of the year. I think we're probably going to see a closed beta group in limited cities. And then by, first quarter, maybe second quarter of 2027, we'll see it gradually ramp up to be the entire fleet. So I do think it's coming to Gen 2 hardware, launch R2 hardware, all that good stuff. But to set everyone's expectations, if you're a regular customer driving a Gen 2 or newer vehicle, I would not expect point-to-point to be in your car in calendar year 2026. It is very unlikely to happen. Yes, if you're asking my opinion on Autonomy Plus progress, I am thinking it's going too slow, especially considering the timeline that they continue to say. Now, I have talked to a number of people on the autonomy team, and they're excited. They are doing good work. They, from someone who's run a software company for the better part of 20 years now, they are approaching the problem in the right way. But I would have expected, from a customer perspective, to see more frequent and continual improvements on some of the little rough edges. So like it has improved on lane change behavior and it has improved on the adaptive cruise control, but still today, the version that we have with Autonomy Plus does not hold a lane near an off or on ramp that is joining or leaving the highway, as well as what the Mobileye solution did the day that Gen 2 launched. Because if you recall, they started with Gen 2 hardware running the system, running the show, while they were training their in-house stuff. And then they cut over, and immediately that performance was very sloppy and bad. Now they've tightened up other things. General lane keeping, much improved. As I mentioned, lane change smoothness, much improved. Adaptive cruise control, much improved. But I would have expected more out of even the existing feature set to have gotten better by this point. So they've got a lot to prove over the next 6 to 12 months. Question here about R3 being a further development. Yeah, I mean, we just talked about how I think a lot of the market is below 50K. And if they want to sell below 50K, they have to make smaller, less expensive vehicles. And R3 is that for Rivian. So we got to get there. Yeah, I hear you. Again, I still want a sample size more than one. We have one Model Y performance against one example of an R2. And I'm not taking away from that, but we need more data. More data. If we made our entire decisions off of one sample size, we would get consistently erratic results. Personal opinion. Yeah, I mean, it's no surprise. I actually did not see they have a test mule in Europe, but Europe is going to be a significant contributor for them. They need to get Georgia rolling to start that. They've been open that cash flow permitting. The goal is to build a European facility to produce R2 and R3. So, and all the variants thereof on that platform. Very excited about it. And I have friends over there that cannot wait for R2 and R3 to be available. Yeah, I agree. Most R2 owners won't camp, but I'm going to try. And I'm 6'4", so it's going to be interesting to see how that works out. Yeah, so if you are looking for more service centers in general, I mean, all that's going to grow as the overall volume output grows. But I think it's probably also fair to say that, like Tesla, the volume that they produce is going to outpace the service center situation, and it's probably going to get a little bit worse before it gets better. But fast forward 2 or 3 years from now, hopefully we're through the worst of it. Yeah, I do not think that Wrap 1 is happening on Launch Edition. Sorry, my guy. But, you know, R3, probably solidly 2 years out. So if you don't need a car for 2 years, the right answer financially is always wait. But do you need a vehicle now? Does the form factor fit what you need? Do you want a vehicle? Does it make you happy? Those are questions you have to, only you can answer for yourself. But from like a pure financial perspective, yeah, I mean, ride what you got till the wheels fall off, right? I mean, that's really the right answer. We know, but I like new cars, and I think a lot of you like new cars, and that's why we're all here. Really, GM's last quarter average vehicle sales price was $52K. Yep, that's right in line with what I expected. So, yeah, so I had kind of said earlier on X about the range thing. The range delta that we're seeing between mixed EPA and highway EPA feels very, very similar to previous generation Model Y, because we had the 2022 Model Y performance, and we saw at least the difference that we just saw on Rivian R2 with the out-of-spec testing, if not worse. So, you know, and then there was also some of the lawsuits about how the way they presented it to customers was a little bit misleading, where in the top half of the battery, it would display a really optimistic EPA range. But when you got in the bottom half of the battery, it's something got a lot more accurate in real world. I don't love that either. I'd rather them be upfront. Yeah, apparently you emailed me a Reddit post. I'll have to go look that up. Wasn't a surprise to someone. And yes, I very much agree. Limited rollout is the key phrase to zone in on if you're interested in point-to-point autonomy for Gen 2 or the launch version of R2. I tend to agree with you, Mike. I think it will be a while, but they keep saying eyes off end of 27. Is that going to be the super limited version that is, like I said, a divided highway, kind of like lane change on command is now? Possibly. There will be a point, though, where that 4 times more compute and potentially the extra sensor will matter. But, you know, for someone like me who trades in cars pretty frequently, especially because you guys tend to demand it, probably not going to be that big of a deal. Yeah, so FSD and Autonomy Plus, they haven't said what the Autonomy Plus take rate is, but FSD take rate is pretty low. Currently, 87% of Tesla owners do not take FSD. I think that will change pretty dramatically, and they're pushing it really, really hard in their sales process. But yeah, not being able to buy a license is kind of a bummer. I wanted to talk about the pricing earlier. I don't know if there's another question. I haven't gotten to that yet, but we talked about pricing, and I think the sort of curve we're expected to see here is that as features improve for Autonomy Plus, I think in the near term, so 1 to 3 years, we will probably see the price go up. But in the long term, I think it will actually become a default feature of every car. So don't bank on it being like this super expensive thing that you can't buy in 10 plus years. Because the reality is if you bought a new car by then, the odds are that multiple vendors will have compelling versions of autonomy, and that will put price pressure on the market, and then it'll become a safety thing. Or you'll find that you can basically get it for free if you buy the insurance direct from, say, Rivian or direct from Tesla. They may give you the autonomy and charge you an exorbitant insurance rate when you're not using it. Okay, let's see here. Yeah, there's a pretty big disconnect between EPA and real world range. Really depends on how fast you drive and the coefficient of drag on the vehicle, along with the rolling resistance of the wheels. Well, for Gen 1, if you're actually talking about true Gen 1 Rivians, it's because they only have Mobileye equipped hardware, and they would need to convince Mobileye to somehow magically come up with a version on that does something more useful. That being said, I think that the right thing to do would probably be to offer some kind of comma AI type solution, but it's not going to happen. There's no way to retrofit something. What I would love to see, if they could do it, is at least do lane centering anywhere. Even if none of the other stuff worked, just basic lane centering everywhere. That would really go a long way. Yeah, I agree. No real big updates since May, but there hasn't been really any updates in general to the vehicle. So they better come out swinging, because the plan for this quarter for autonomy was stop signs and stoplights. And I also believe that it's going to have automatic lane changes, not just lane change on command. So when you're on the freeway, it'll automatically change lanes. And then we should also see lane change on command, which is where you hit the blinker and it will execute the lane change anywhere it can see lane lines. That's the expectation for this quarter. This quarter is already 1/3 of the way done. So if they're going to be on time with that in the next 60 days, they better have something pretty juicy to deliver. Yeah, we'll see. I think we're in a bubble where people are worried more about the computer than most normal buyers. Most people don't care. They just want to have great lane keep, good cruise control, some basic, parking assist type stuff. But yeah, I don't think it's the big deal. Yeah, Rivian Stories, that's a great question. I followed them a lot in the beginning, but they're off living their lives, I guess. Yeah, so I've been following this a little bit, and he's taking a year off. A sabbatical is how he positioned it on that interview. Those who have been in high stress, high demand jobs for quite some time, myself included, actually, running software companies, burnout is very typical. And so to get to the finish line where the thing is rolling and there's a team in place to continue those refinements, I'm not nearly as shocked to hear that he's planning to take a year off. So we'll see. Hopefully he comes back. Sometimes they don't always come back, but I hope he does, because he's been at Rivian a long time. And the R2, for everyone's foibles about the range testing of the one example from out of spec, it's shaping up to a pretty great product. Okay, let's see here. Yeah. So, Rivian Roamers actually, I think they were either joking or serious about having a leaderboard for most visits to big box stores, because Chris Hilbert, going by Hilby on X, really wants to own that because he goes to Costco all the time and is doing R1T. You are correct about the sand. I actually gave the S-Care Silver image to AI and said, make it have a little bit of motion so you knew that the stream was not frozen if we were on a still screen. So yes, actually there is a little bit of motion. Yeah, so the interesting thing here is, Tom Logney out of State of Charge, that 70 mile per hour range test was with all terrains, right? And he beat the number that Kyle and crew got. So should be 7% worse than what Kyle and them got. We need a bigger sample size. That's all I'm saying. Yeah, I'm glad you guys noticed the sand. I had fun with that actually. Yeah, what else we got here? I don't know. Probably not. I wouldn't assume that Tesla would cherry pick. We've also seen that, at least according to Rivian Romer, there's additional buffer capacity in R2, sort of the same way there is in R1. So I think that's probably sort of zeroed out, but you never know. But seems highly unlikely, in my opinion. Yeah. Yeah, not happening. Yeah, you know that. And I realize that's a joke. Yeah, I mean, as far as FSD missed promises, I did a video about this a while back. I didn't get a whole lot of views. It was called, why 87% of people don't take up the offer on FSD, and missed deadlines and goals is a piece of it, fluctuating price. But at the end of the day, I think a lot of people that are mass market buyers are only interested if it can truly take liability off of their hands, and if they don't take liability off their hands, they need to be able to have explicit control over speed control. So the lack of speed control and preferences on lane change behavior are the two most annoying things that most drivers who are clear-headed about FSD, that are just sort of normal people, not fully into the juice on that, would agree need to change. And until that happens, they don't really want to use it. And then furthermore, if they don't have that control, Tesla needs to take full liability control, and they are unwilling to do that for lots of reasons. It would not surprise me that the take rate is improving though a little bit, because it has gotten so much better in the last few years, but it's not L4, it's not the promise, and it's, to most people, $100 is meaningful enough to not want to spend unless it's doing the actual driving for them, where they do not have to pay attention. Yep, I agree with this take. Let's see what else we got here. It's general chatter. It's great. Yeah, we'll see. FSD Lite, I mean, it looks promising, but it's a far cry from, imagine being one of the Hardware 3 owners who paid $15,000 for the promise of a car that will drive itself and take the liability without you in it. And the best you're getting right now is FSD Lite. That's a tough pill to swallow. And, I think eventually, even Elon's admitted this, that they are going to have to do retrofits. So we'll see how that shakes out. Yeah, there's so much more in the range, you guys. I realize that people have anxiety about it, and there will be more testing, but having more sample size is going to really go a long way. I don't think that's going to happen. I wish it was. I really enjoyed the big range on our R1 vehicles, even though we have all-terrain tires, and even though we don't hit our EPA rated range on those either, because apparently we have a lead foot, they're still rated for 370 miles with the max pack and all-terrain tires. And when I did the over 5,200 mile road trip last year, there's a couple stretches where it was really nice and handy to have that extra juice, especially when we know how much it slows down at the very tippy top of a battery. Having a ton of range doesn't mean necessarily use it all, but it does mean that you can live more of your life kind of in that optimal zone of charging speed. Yeah, we will see. We will see. You know, I did a video too about the autopilot being canceled, and part of that's a money grab for sure. But a big piece of that is also the fact that the state of California told them that they would not be able to sell cars in California if they continued to ship cars with autopilot and let people mistakenly believe it was more capable than it was. So they had to discontinue the marketing, kill the feature. Now they could have actually made it autonomous. That would have qualified. They probably could have rebranded it. That would have qualified. There are ways that they could have gotten around it, but they chose not to. So here we are. Yeah, the question about Autonomy Plus Plus. So we talked earlier about liability when it comes to autonomy. And I think Autonomy Plus is going to be the vernacular that they use for you're watching the vehicle, and it can do a lot of impressive stuff. And I think that we're going to see some other kind of verbiage about the vehicle will operate without you paying attention and Rivian takes the liability. Be prepared though. That's going to mean a couple things. One is like they're having to take on liability, so extra insurance costs, that's going to be more expensive. And secondarily, when they are responsible and they do not want a speeding ticket, your car is going to go the speed limit. The speed limit. It's not going to go over. It's not going to roll stops. It's not going to do anything that most human drivers will probably do on a regular basis, but it will do it without you in the car, or it'll do it without you paying attention. But it might be not the way you want your car to operate. Something to think about. Do I think that Rivian will run into the same problems as Tesla FSD, where the news runs negative stories as soon as the first inevitable accident happens before fault is given? I think it's probably inevitable. You know, there's nothing like a good click for the news department. But, you know, at the end of the day, butts in seats who actually experience the technology is the best way to overcome that. Yeah, we look like premium term might be bumped back to beginning of 27 now instead of end of 26, which is notable. I agree with you that the QA work on the autonomy stuff is significant, and I will give Rivian credit for the fact that they tend to be more cautious, and while not perfect, generally it's a pretty clear linear progression. They are very hesitant, it seems, to do any step backwards on things. The only situation where we really experienced that was when they first went to their in-house model and dropped Mobileye so they could drop it as a component inside of the vehicle, which was probably between $600 and $800 in cost for the vehicle. We did see a big regression, but we also saw very rapid improvements. So I still don't think that parts of it are as good as Mobileye was before in terms of that lane keeping behavior I talked about earlier, but yeah, we will see. I agree. I know that I drive, two Rivians, but I agree. FSD has gotten really good. It needs a few extra tweaks. I think you need speed control at minimum, but yeah, it's gotten very, very compelling. Yep, charge curve looks good. All right, I'm from the Northwest. For my weather, my basic understanding is that all-wheel drive is better, but wondering if you have an opinion on getting a rear-wheel drive R2 as it's lower price and better mileage. I've had a preference for all-wheel drive vehicles, but there is a pretty notable range hit. I said at the beginning of the call, right before the earnings call actually happened, that I would love to see a rear-wheel drive premium R2 because I think that that's really the sweet spot. If you could get the improved sound system and, cooled front seats and a few other little options on the base trim, I think that otherwise it would be a completely acceptable vehicle. And the other thing people often worry about when it comes to rear-wheel drive only or two-wheel drive EVs is snow. And all-wheel drive is always going to beat it. But a competent traction control system on an EV with rear-wheel drive and potentially snow socks can do a lot more than people think. So it depends on what your needs are. If you know you're going to be in snow pretty frequently, go for the all-wheel drive. But if you don't, hey, I wouldn't knock you to go for the rear-wheel drive. All right. Hey, Bill. Good to see you. You're excited for Autonomy Plus when you get your R2? Yeah, the Autonomy Plus being included for the lifetime of launch R2 is great. And yeah, the Starlink price going up is a real bummer. And FSD, I think I think Elon would love to get it above $100, but I also think that he's driven by a number of FSD subs. So those two things are kind of at odds with each other. Yeah, that would be totally valid. A Mercedes-Benz CLA, but I believe there are some potential power boosting issues on the way that thing charges on 400 volt that you should be aware of. So, yeah, there you go. All right, do we have any more questions? Oh, yeah, we do. Okay, great. Yeah, speed limit thing happening to Tesla in France. I think we're going to see this everywhere. They very carefully word things and phrase things where the automaker's in control or the driver is in control. And that's why we see full stops at stop signs and we see Mad Max going 85 like an insane person on the highway. So we will see. Yep, I agree. All automakers go through it. People are very, very afraid of an autonomous system making any mistake, and yet humans make mistakes all the time. I'm not saying it's a pass. Obviously, the bar is very high. It needs to be very, very, very safe. But it seems a little bit at odds that even if you can prove that an autonomous system is 10, 50, 100 times safer, there's still going to be a hesitancy of people, like they seem more accepting of bad outcomes when a human is involved for some reason. It's more of a marketing and psychology problem than a technology problem. Yeah, there's lots of patents from different automakers about interconnected car conversations of them being able to communicate, as well as for things, not only for preventing crashes, but pulling tighter to increase efficiency, to avoid things ahead that a camera couldn't see. So if a first vehicle sees, let's say, a police officer pulled over or a car wreck or whatever, the cars behind that could prep for that long before a sensor suite could ever see it. Yeah, I think the vast majority of people do not want their car to drive for them. All right, Mike, if you know, you know. Yeah, so right now it looks like I'm probably going to take delivery of my R2 on Friday of next week. It just got delivered to the service center as of last night, so I am excited. So soon, very, very soon. Again, I am going to be very sad to see my R1T go. I have full intentions and plans as of right now to buy a Gen 3 R1T in 18, 24 months, whenever that may be. But yeah, I'm excited for the next chapter of R2. Good. I want to see you camping in an R2. Send me a photo on X or something when you do it. Yep, exactly. Our rear-wheel drive EVs handle better in the snow than ICE cars thanks to the weight distribution. Thanks for chiming in. All right, is this the end of the line? Looks like the pop-out chat here is a little behind this other chat. So I will just read some of these since this other one's not caught up. What will it take for actual buyers to forget about CarPlay being a non-starter for purchases in a Rivian? Okay, we're seeing it now. Oops. Let's see this one. I actually have a video about this that I'm workshopping for this next month. I think Rivian should just relent. I do believe most owners don't need it, but there's a compelling case from a sales perspective and from just a user experience perspective that offering it far outweighs not offering it. And there's some reasons why I think it's kind of ridiculous that Rivian's going to hold it back from Rivian when they're actually already doing the work to make it work. So we'll talk about that. Yeah, my pleasure. Thank you for being here. Always happy to host. This is a quarterly thing for me. I'm not a stock, guy as far as I don't want that to be like the ethos of my channel, but this is a good excuse for me to get the community together and do some fun stuff. Yeah, dude, I'm getting an R2. But you're probably talking to Dennis. You're deciding R2 versus keeping a Defender. I mean, fair choice, fair play. Whatever suits you, man. Whatever makes you happy. That's all I care about. Yeah, probably. And woohoo indeed. How are R1S and T used pricing holding up? You should check out the depreciation video I just put on my channel earlier this week and take a look. They are depreciating sort of normal, a little bit faster in the very beginning, but if you're looking to get a used R1S or R1T, you could potentially scoop up a deal. Now prices have been propped up a little bit by high gas prices, but I do not know how that will shake out long term. You want to know what I want in a Gen 3 R1T? It's actually pretty simple. I would like to see improved thermals, significantly improved thermals, more in line with what we see in R2. A higher voltage battery system, because I think in a flagship vehicle like R1, there should be at least a 800, 900 volt charging architecture for 400 kilowatt charging kind of speeds. A better sound system that is in line with the price point and category of the vehicle that it's in. And I would also like to see some slight changes to the bodywork that would be explicitly focused on the cost of repairability. Because especially on the T, if you back into something in that back quarter, it's a problem. So if they just did those couple things, I would be over the moon. Thanks, Tim. Appreciate that. So you're supposed to get yours the day after me. New VIN. Oh no, after the Half Moon Gray issue was delayed your original VIN. Well, I'm still hoping to do a local meetup. So if anyone's in the Pacific Northwest area, if you'd be interested in meeting up once I get my R2, let me know. Maybe we can put something together. I don't want to step on the toes of the awesome local Rivian Club with Emerald City Rivian Club, but if there's some fans in the area, I got some fun stickers. By the way, these stickers are on their last day of coupons. So R2 launch, $2 off of these stickers. Not here to pimp stickers, but I just happen to have them on my desk. I'll give you some of those if we meet up in person. You will never use CarPlay and Android Auto, but you just want to hear people not complain anymore. That is fine. And yes, I do fully intend to try to record my delivery experience, not only as like hey, I got a new car, but I want to show people what it's like and what they can expect when they go into their R2 experience. So the pre-work, which we're doing right now with all the paperwork, what's like getting connected with a guide. Now, my experience is not exactly what most people are having because Rivian is aware of the channel and they've want to make sure that I have a bit of a curated experience, and they did sort of speed up the not speed up the delivery, but speed up the mechanism at which it got to my local service center. So I will be transparent about that, but everything else in terms of like how the paperwork process goes, what it's like setting up the car for the first time, all that kind of stuff, I intend to record. So hopefully people find value in that. All right, let's see here. Because again, the pop-out one here is a little bit behind the other live feed here. Someone said, thank you. Oh, no, not catches up, just a little bit behind. Thank you for your previous video with the adapters, charging cable, free in California. Yep, that's, I don't want people to miss that. That's $650 that you deserve, because if you live in a state that has that, you should absolutely have that. And you were able to change your wheels. Great. Fantastic. Yeah, and drop that back window down. Yep, putting your sticker on the day you get it. That's what I love to see. What do I think of the R2? Oh yeah, well, so we already kind of covered this, so you might have to scroll back in the deal. But I do not think it's worth canceling over. I do not think it's as big of a deal as everyone would like to make it out to be. I understand that it sounds scary, but I do not think that it's, I don't think the real world application is really going to matter that much. I think the real world number would have been a lot closer probably, but even with that, sometimes you have to ask about, is the story for the reason of being a story? And as I've said here repeatedly, my biggest thing is I just want more sample sizes. Like a bigger sample size, more data. Once we get there, I will be happy to report on whatever the deal is, but n equals 1 is not good enough for me. Personal opinion. All right, so you think CarPlay and Android Auto is part of so many folks' life? Yeah, easy wins for sure. I think it takes so much pressure off of their software development team, and they haven't even been able to speed run the let's say the top 20 most popular media apps. We just have Apple Music, Spotify, XM Radio, Tidal, and that's kind of it. So I'd like to see YouTube Music for sure. A few more mapping options. I have a podcast app I really like called Overcast that I would like to use. I don't know. We'll see. Yeah, I'm looking forward to the adventures in R2 as well. All right, thanks for being here. Stay curious for a Rocket fan. Does Rivian have an option for car insurance? They do in some areas. I was going to cover that a little bit, but I don't know. Are people interested in that? I actually did get a quote from them that was surprisingly competitive. So I don't know. Would a video about Rivian insurance be interesting to you? If so, let me know. I'll take a look at that. Yeah, you're welcome. Thanks for being here, man. Appreciate it. Yeah, you should be hyped even more for your R2. I think it's good. All right, peace out, Patrick. It's good to see some of you guys are heading out. Yeah, so the CCS adapter from Rivian is definitely compatible with the high amperage. Even a newer Tesla one is. The issue that you're probably mentioning with state of charge was an older Tesla CCS to NACS adapter, I believe. So yeah, make sure it's a high rated one for sure. Yeah, I think you're gonna get 3.2 with a mix. You know, other owners I've talked to are solidly in that 3.1 to 3.3 range. So yeah, I think you're right in line. My pleasure. Absolutely love your Gen 1 R1T. It is for sure overbuilt. But yeah, the backseat is pretty tight. I actually spent a little bit of time in the backseat of my own R1T recently, and I forget how much smaller it is than our R1S that we have, which is a Gen 2 R1S, and then how much bigger still the second row is in R2. Do I think that the efficiency is something that can improve with software updates? It could, but I mean, you're really going to improve that with things like throttle response. What you're really fighting here is aerodynamics, tire tread, and how much power you're putting down. So, the car they compared, it's probably also worth noting, it is a more powerful system in the Rivian R2 with a boxier shape than the Model Y Performance. It beats the Model Y Performance on the quarter mile and 0 to 100 because it pulls above 40. The Model Y Performance only has a slight edge on 0 to 60 and definitely has less power. So that's part of it, for sure. I will be doing some real-world range testing, I believe, and I, most importantly, want to do an actual long road trip. I want to go do a couple thousand miles, now that I'm getting my car in the next week. I've mentioned it in the newsletter a few times, which I have the QR code there in the corner, but I want to do a multi-thousand mile road trip in R2 on the 20-inch all-terrains and see how they do. Because I think that that's a much broader sample size to know how I averaged over lots of terrain, lots of different speed, lots of different altitudes, to get a more accurate sort of better resolution about how a vehicle can do over time. Again, this chat is a little bit behind it, but as soon as I switch this other one, it's like it catches up. Yeah, you're welcome, Kerrigan. Thanks for being here. And Overcast for the win, for sure. The killer feature on Overcast is Smart Speed. It has saved me literally days of my life just by speeding up gaps. It is bananas to me. And yeah, still not here, but Let's Go Zero Carbon is saying that as a 100% EV driver for over 10 years, you don't need more than 300 miles EPA, 250 miles highway. Charge curve is more important than you just need enough range to get to the next charger. I do pretty much agree with that. I would say here in Washington, especially when we get in Eastern Washington or some of the more remote areas, a 15 to 20% bump over those numbers is meaningful in some areas, but for 98, 99% of people, it does not matter. Still a very limited sample size, but Rivian Rumor is currently showing better efficiency on the 20-inch wheels. We'll see how that goes. It's special trail terrain TA plus. Something's up with the efficiency numbers that everyone's spinning out about. There's no reason that the test out of spec should have gotten worse range than what we saw Tom from State of Charge with more elevation, got on wheels that are rated for 7% worse range. So something isn't quite adding up. So I want more data. Someone says they have Rivian insurance, which is through Nationwide. Yeah, they actually can use up to 3 different insurance providers, I learned. So I my research for this and the quotes. but it sounds like you have nationwide, and they gave you a great price since we already had nationwide for your home. Add your wife's car as well for bundle pricing. Makes total sense. All right, you guys. Well, I think we're pretty much at the end of it here, which sounds about right. We tend to go about an hour over the actual call. Historically, this is our third time doing this now together. So thank you all who showed up. Again, don't forget the stickers are on their last promo. R2 launch. We'll save you a couple bucks on that. Tomorrow's the last day. And yeah, I really appreciate all of you being here. Until next time, stay curious.